If you are over 60 and you own a home, there are 5 things you need to do right now, and most people have no idea any of them exist. Not because the government hid them, but because nobody told you. And by the time most homeowners over 60 figure this out, they have already lost equity, lost benefits, or made a mistake that cannot be reversed. And I am going to show you exactly what those 5 things are, what each one costs you if you ignore it, and what you need to do today, not next month, not after the holidays, today. Here's why this matters. HUD, the Social Security Administration, and Medicare all have rules that directly affect your home. Rules about what you can do with it, what you can receive because of it, and what you can lose because of it. And these 3 agencies do not talk to each other. So you can be doing something that looks perfectly fine on the surface. Renting out a room, helping a family member, pulling equity, and trigger a problem you did not even know was possible. A benefit clawback, a Medicaid penalty, a Medicare premium spike. These are real things happening to real homeowners over 60 right now, and 90% of them never saw it coming. I'm going to go through all 5 steps today. And I want you to tell me in the comments which one surprises you the most, because I promise you, at least one of these is going to make you stop and say, I had no idea. So stay with me through all 5, because some of these connect to each other in ways that will only make sense once you have seen the full picture. And send this to someone you know who is over 60 and owns a home, because this is the kind of information that saves families money. And most people are not going to hear it anywhere else. Let's get into it. The first thing you need to do right now is find out whether your home is protected under your state's homestead exemption, and whether you have actually filed for it. This sounds simple. Most people assume it is automatic. It is not. The homestead exemption reduces the taxable value of your primary residence. That means a lower property tax bill every single year. And in many states, there is a special version specifically for seniors, for people over 65, for people on fixed incomes. But here is what most people do not know. You have to apply for it. And in some counties, if you miss the filing window, you lose it for that entire year. Some states require you to reapply every year. Some do not inform you when your exemption lapses. And some have income thresholds that changed without notice. So a senior who qualified last year may not qualify under the new limit this year unless they file an appeal. What does this cost you if you ignore it? The average senior homeowner who is eligible for a senior homestead exemption but has not filed it is overpaying somewhere between $800 and $2,500 per year in property taxes. Over a 10-year retirement, that is up to $25,000 in money you did not have to spend, money you could have kept. So what do? You go to your county assessor's website right now, today, and you search for Senior Homestead Exemption, plus your county name. Find out what the income and age thresholds are. Find out whether you are currently enrolled. And if you are not enrolled, find out the next filing deadline and get it on your calendar. This is free money. You have already earned this home. You should not be overpaying to keep it. The second thing you need to do is understand exactly how your home is titled, and whether that title is putting your Medicaid eligibility at risk. This is the one that surprises people the most. So I want you to pay close attention here. If you ever need long-term care, a nursing home, an assisted living facility, extended home health care, Medicaid is often the program that pays for it. Medicare does not cover long-term custodial care. A lot of people do not know that. Medicare covers short-term rehab. It does not cover the cost of you living in a nursing home for 2 years. Medicaid does, but Medicaid has asset rules, and your home is an asset. Here's how this works. While you are alive and living in your home, Medicaid generally does not count your primary residence as a countable asset. That is good. But when you pass away, your state's Medicaid program has the legal right to file a claim against your estate to recover what it paid for your care. This is called Medicaid estate recovery. And if your home is titled in your name alone, it goes through probate, and Medicaid can come after it. We are not talking about small amounts. The average Medicaid spend for a nursing home stay of 2 years is over $150,000. Some states will pursue that entire amount from your estate, from your home, from what you plan to leave to your children. So what do? You need to talk to an elder law attorney, not a general estate attorney, an elder law attorney, about how your home is titled right now and whether a transfer to an irrevocable trust, a life estate deed, or another protection strategy makes sense for your situation. And you need to do this before you ever need care, because Medicaid has a 5-year look-back rule. Any transfer of assets you make in the 5 years before you apply for Medicaid can be clawed back. So waiting until you are sick is too late. The time to protect the home is now, while you are healthy, while you have options. One wrong title on one piece of paper can cost your family more than $100,000. That is not an exaggeration. That is the rule. The third thing you need to do is check whether you are receiving the correct Medicare premium based on your current income, and whether you have been incorrectly charged a higher one. Here is something most people do not know about Medicare. Your Part B premium, The monthly amount you pay for Medicare coverage is not the same for everyone. If your income is above a certain threshold, you pay more. This is called IRMA, which stands for Income-Related Monthly Adjustment Amount, and it is based on your tax return from 2 years ago. So in 2024, Medicare is looking at your 2022 income to decide what you pay today. Here's where homeowners get hit. You sell your home, or you do a cash-out refinance, or you sell a rental property. That transaction shows up as income on your tax return. And suddenly, in the next year or two, your Medicare premium jumps, sometimes by $200 to $400 a month, because of a one-time event that is never going to happen again. Medicare does not automatically know that. They see the number, they apply the surcharge, and they start deducting it from your Social Security check without a detailed explanation. So what do? First, check your Medicare premium right now. If you are on Social Security, look at your benefit statement and see what is being deducted for Medicare. Then go to Medicare.gov and look up the ERMEA thresholds for your income level. If you had a one-time income event, a home sale, a property transaction, a retirement account distribution that was not typical, you have the right to file an appeal. It is called an ERMA life-changing event appeal, and you file it using SSA Form 44. The categories that qualify include retirement, loss of income, divorce, and certain asset sales. If you qualify and you win the appeal, your premium drops back down, and that could be worth $2,400 to $4,800 per year, every year, for the rest of your time on Medicare. Most people never file this appeal because nobody tells them it exists. The fourth thing you need to do is protect yourself from the 3 most common home equity scams that specifically target homeowners over 60. And I want to be specific here because these are not obvious scams. They are not emails from foreign princes. They are professionally run operations that show up with business cards, websites, and promises that sound completely reasonable. The first one is the deed theft scheme, where someone convinces you to sign documents, sometimes through a loan modification or equity sharing program. And what you're actually signing transfers partial or full ownership of your home. This is happening in every major metro area in the country right now. The second is the reverse mortgage misrepresentation. A legitimate reverse mortgage through a HUD-approved lender is a real financial tool. But there are brokers who present reverse mortgages to homeowners without fully disclosing the costs, the interest accumulation, or what happens to a non-borrowing spouse when the primary borrower dies or moves to a care facility. And the third is the home repair scam. A contractor who targets seniors, starts a job, demands cash up front, and either disappears or does work that creates liability issues with your homeowner's insurance. So what do? Before you sign anything related to your home, you call the HUD Housing Counseling Hotline. This is a free service. HUD-approved counselors will review any document, any offer, any program that involves your home equity or your property title. They are not trying to sell you anything. They exist specifically to protect homeowners from exactly these situations. And if a contractor or a broker tells you there's no time to get a second opinion, that is your sign to walk away. Urgency is the tool of every scam. Legitimate transactions give you time. The fifth thing, and this is the one that connects everything, is to run a complete benefits coordination check between your home, your Social Security income, and your Medicare and Medicaid eligibility. Here's what I mean. These 3 systems, HUD programs, SSA benefits, and Medicare and Medicaid, all interact with each other in ways that most homeowners over 60 have never been walked through. A decision you make about your home can affect your Social Security calculation. A decision about your Social Security timing can affect your Medicare premiums. A decision about your home's title can determine whether you qualify for Medicaid years from now. None of these agencies will tell you how their rules affect the other 2. That is not their job. Their job is to administer their own program. The coordination is your responsibility, and most people do not know that until something goes wrong. So what does this check look like? It means sitting down and mapping out 4 things. 1, what is your home currently worth? How is it titled? And does your current setup protect it in a Medicaid scenario? 2, what is your current monthly Social Security benefit? Have you verified your earnings record is accurate, and are you receiving every benefit you are entitled to, including any spousal or survivor component? 3, what are you paying for Medicare right now? Is your Part B premium correct? And have you ever had a one-time income event that triggered an RMA surcharge you could appeal? And 4, are there any HUD programs, property tax deferrals, home repair assistance programs, reverse mortgage counseling, that you qualify for right now that you have never applied for because nobody told you they existed? This is not a small exercise, but the financial impact of getting this wrong is not small either. A homeowner over 60 who has the wrong title on their home is overpaying on property taxes because they never filed for the senior exemption, is paying an elevated Medicare premium from a one-time income event, and has never verified their Social Security earnings record. That person could be losing anywhere from $5,000 to $15,000 per year in unnecessary costs and missed benefits. Over a 20-year retirement, that is $100,000 to $300,000. That is not a rounding error. That is the difference between a retirement that works and one that runs out. So tell me in the comments, which of these 5 surprised you the most? Was it the Medicaid estate recovery, the Medicare IRMA appeal, the homestead exemption filing? I read every comment. I want to know where you are in this process and what question you still have. And if you want me to do a full video going deeper on any one of these 5, the Medicaid title protection strategies, the IRMA appeal process, the HUD counseling programs, comment the topic below and I will build that out for you. If this helped you, hit the like button. Subscribe and hit the bell so you are the first to know when the next video drops. I will see you tomorrow.